Hi everyone, I'm back with the latest on how the property market did in Q4 of 2025 and also just to give you an indication of what to expect in 2026. Let's dive in. So the latest news is that both the private property market as well as the HDB market grew by the slowest in recent years. The private property market grew by 3.4% for the full year of 2025, which is the slowest growth in 5 years. While for the HDB market, price grew at 2.9% for the full year. So one natural concern right now in the market is, will prices drop given the slow increase in 2025? So in order to try to answer that question, we first need to look at what actually affects prices. Prices in the market are determined by demand on one side of the equation and supply. Let's look at demand first. So for the full year of 2025 in the private market, there were a total of 25,890 units sold. This means that 2025 was the best performing year since post-COVID 2021, where there was a record 33,557 units sold. So if you look at a broader time frame from 2010 all the way until last year in 2025 and take an average number of units sold, on average there are 23,000 units sold, broken down into 10,946 in the new launch segment and 13,117 in the resale segment. Now I want you to remember the 10,946 units sold in the new launch segment on average. So demand in the private market has been high, given that it is the best year since 2021. Moving on to the supply side, we have to first understand that new supply is given in the market through the government land sales program. This is when the government will release land for developers to bid and subsequently developers will open the sales for the public. So when we look at the available units currently in the market, you will see that as of Q4 of 2025, there's only 14,859 units available in the new launch market to buy. This is the lowest number since Q4 of 2021, where there was 14,154. So is new launch supply actually high in the market? Now, if you take this one step further and apply the 10,946 units that are sold on average over a longer term, you'll realize that the available supply in the market will be sold out in only less than 1.5 years. So how much supply can we expect coming into the market in 2026? The government has already come out to say that for the first half of 2026, they will launch 4,500 units. If we annualize this number, this means that in 2026, we are forecasted to have 9,000 new units coming into the private market. This is the lowest since we hit a peak of 10,500 units in 2024. So we can expect even lesser units coming into the market in 2026. Do you think this will put pressure on prices to increase or decrease? Another perspective to consider is the land cost for developers. Land cost is important to understand because it forms a significant proportion of your total cost for developers, roughly at 65%. So when land costs generally go up, there is even more pressure on prices to stay steady or to increase. So I've taken out some examples of new launches in 2025, comparing the land cost that it was won at to the average transacted prices on launch day. So for example, Canberra Crescent Residences was bidded at a land cost of $793 per square foot per plot ratio, and its average transacted was $1,900 per square foot. Generally, you can see that as land costs start to increase, the average transacted per square foot tends to increase as well, with River Green, the highest land cost in this table, at $1,325 per square foot, transacting at an average per square foot of $3,130 on launch day. So what I've also included is an estimated developer's margin to show you what we can expect prices will be for new launches this year and going forward. So this year has already started. At the point of this recording, Coastal Cabana has recently had its launch day and its average transacted was about $1,734 per square foot. This puts it at about 31% of developers' margin from its break-even price. So one thing that I'll point out here is that Coastal Cabana's land cost is $729 per square foot per plot ratio, which is about 10% less than Canberra Crescent Residences that was launched last year. If you look at Revell Tampines, which is the next EC coming up, the land cost is $768 per square foot, which is more expensive. Next, the cheapest land cost this year will be Tengah Gardens Avenue, which is $821 per square foot. So you can expect that prices for Tengah should hover around the $1,890 mark if developer keeps to about a 20% margin. This is the new base to expect for new launch prices this year. At the higher end, with River Modern, which is expected to launch very soon, because the land was bought at $1,420 per square foot, you can expect per square foot prices to be minimally at $2,883, though I anticipate the prices will be higher given that the average transacted in that area was already about $3,000 odd per square foot. So generally, you can see that the land cost for this year has started to increase compared to the launches of last year. However, here is the most important thing. The land cost for launches after this batch will be even higher. Let's take a look. Senja Close and Woodlands Drive 17, which are both ECs, are already slightly under the $800 per square foot mark. If we look further, OCR developments such as Lakeside Drive and Bedok Rise have also recorded a much higher land cost per square foot. Take Bedok Rise for example. At $1,330 per square foot per plot ratio, that is almost the same price as River Green's land cost just last year in 2025. Moving into the RCR region, Dunnan Road and Holland Link have already transacted at $1,400 per square foot per plot ratio, which is the same as River Modern, which is going to launch in a couple of weeks' time. At the highest end, the government land sales at Bukit Timah Road, which is just above Newton MRT, was sold at $1,820 per square foot per plot ratio. Now, even if we assume a smaller developer margin, you can easily expect the per square foot prices to be about $3,500 per square foot for this development. So if you're someone that's looking to purchase a new launch property, waiting for next year's launches will likely cost you even more. Now at this point, you might be wondering, what about the resale market? The resale market is also generally at a high. Having been on the ground, owners are also asking for higher prices, and for popular developments such as Sterling Residences, the difference between the newest development in the area, which is Penrith, is less than 10%. So I've also prepared a visual, which is the average transacted 3-bedroom prices in the River Valley region. Developments that are in dark blue are resale developments, and I've compared them to the average prices transacted for 3-bedders in last year's launches, namely River Green, Zion Grand and Promenade Peak. So you can see that the average transacted prices for the 3-bedders for new launches is actually quite competitive compared to resale properties. So this also helps to explain why River Valley launches last year sold particularly well. So the key takeaways here is such: 1. Resale prices are at a high. But secondly, your future new launch prices are going to be much higher. If someone misses this year's batch of new launches, be prepared to pay a much higher price for next year's new launches. However, if you are in the market and are thinking of purchasing something, whether or not it's a new launch or resale, I think that if you don't act now, you will likely pay a much higher price in the future. Next, let's move on to some of the market data just to give you a larger snapshot of what to expect. So across all the 3 asset classes, the landed property market has really taken off in Q4 of 2025, growing by the most. If you look at the transaction volume, 2025 was the best year for condos since 2021, but HDBs recorded a decline compared to 2024, which means that the HDB market has significantly slowed down. And on the ground, I'll tell you also that viewings for HDB listings have really decreased quite a bit. Next, moving on to median prices across the island. The average island-wide price of a HDB is $650,000, and you can pause the video right here to see the median prices of resale HDBs transacted for each HDB estate. So if you're in the condo market, this is how much you can expect to pay for a 1,000 square foot unit. Island-wide, a 1,000 square foot unit currently costs about $1.88 million. And again, you can pause the video right here to see how much the 1,000 square feet costs for each district. So inter-terrace per square foot for the last quarter has really shot up by a lot, averaging about $2,291 per square foot. This is likely because of HDB upgraders as well as condo upgraders deciding to move to a landed property. The same story is also for freehold semi-detached prices, with the average per square foot transacted at slightly under $2,000 per square foot. In the detached market, you can expect to pay about $1,885 per square foot. So this slide just shows you the list of neighborhoods associated with each district. You can pause the video right here as well to look at the neighborhood that belongs to a particular district. Next, moving on to the rental market. The rental market did record a slight decline in Q4, but for the full year of 2025, prices did increase by 1.9%. So I think that HDB rental prices have almost plateaued, while condo and landed prices have bottomed. So the stabilizing of rental prices is a good news since the sharp increase in 2022. If you break down the condo rentals into the OCR, RCR and the CCR region, the asking for OCR rentals is at $4.52 per square foot, while average for RCR is $5.48 and for CCR PCR at 593. Let's talk a bit about the new supply coming into the market. Next year, HDB is expected to launch 19,600 new BTOs, which is in line with a general increase since COVID. In the condo space, as I mentioned earlier in the video, the government has already announced that they will release 4,500 new units in the first half of 2026. Annualizing it would mean that about 9,000 units will be launched next year. However, the important thing is this. It marks a continued decrease in government land sale supply since the peak in 2024, which means that there will be lesser new launch units coming into the market. When we look at the MOP as well as the TOP supply, this is also where it gets interesting. For HDB this year, there will be 13,480 units that will achieve its MOP. This is twice the number of 2025's low of 6,970 units. The increase in MOP units in addition to the BTOs will further add price pressure for HDB units. So I expect HDB prices to further stabilize. In the condo market this year, there will be about 6,955 units achieving its TOP. So unlike the HDB market, this year is also a relative low for the condo market. Moving into 2028 and beyond, one important thing here is this. The government did change the seller's stamp duty period from 3 years to 4 years in July of last year. What this means is that launches that will achieve a TOP from 2028 onwards can only sell 1 year later. This will push back some of the increase in supply coming into the market, which means that condo prices should remain stable and be on an upward trend. Next, the latest on interest rates is that the US has decided to keep its key lending rate stable, but President Donald Trump has already nominated his incoming Fed chairman who will replace Jerome Powell in May. So we can potentially expect interest rates in the US to decrease from second half of 2026 onwards. But back here in Singapore, interest rates have already started to decrease ahead of the US. Currently, the private variable interest rate packages hovering around 1.4% depending on which bank that you are looking at. So interest rates are already relatively low, and even if the US Fed starts to decrease interest rates in the second half of 2026, our interest rate should not be reduced by as much. So if you're thinking of purchasing a property and want to wait for interest rates here in Singapore to drop, I don't believe that there's a marginal difference even if the US Fed decides to lower its interest rate in the second half of 2026. Next, just some data on income and population. These are important to understand because these are structural variables that will help to prop up the Singapore market. So to be in the top 30% of household earners in Singapore, you have to be earning about $15,200. For the top 20%, about $19,281, and for the top 10%, $26,700. Now, more importantly, how does this translate to affordability in terms of housing prices? If your household is under 35, a top 30% income earner can purchase a $2.33 million property, a top 20% $2.96 million, and a top 10% $4 million. So if you stretch further and look at a household of average 50 years age, the top 30% can afford a $1.5 million, while top 10% can afford $2.64 million. So the way I see the data is a price of $2 million is actually quite affordable in today's market. Resident population has also steadily grown at about 0.67% per annum, and the latest is that we have about 4.2 million residents in Singapore. Further population growth will also help to prop up housing prices. So lastly, if you look at unemployment rates among residents as well as citizens have remained relatively low at 3 and 2.8% respectively. Low unemployment is important because as long as people are employed, they are able to continue paying their mortgages. So overall, the market is healthy, but I think we'll start to see a divergence between HDB prices as well as private property prices given the increase in supply in HDBs as well as the decrease in supply in condo properties. So that's all I have for this quarter's review. If you're planning your next property move, DM me at 8835 7981. Take care and see you in the next one.